This is episode 1172.
What our customers value is the data certainty that we provide in the training data, the predictability of what we do. And to give you a very specific example, we work with automobile companies and being able to make sure that their self-driving car technology is accurate on the roads. And that requires, as you can imagine, volumes and volumes of annotated images that have to be done at a very high quality level. And so what distinguishes us is we're very cost efficient, not the cheapest, because we do ensure that we treat our employees fairly, but the accuracy and the data analytics that we provide around those data solutions and the data output that we provide.
We're at a moment where AI is moving from promise to production. But there's a layer most people don't see. It's not the algorithms, it's the data behind them and the discipline required to make that data reliable. Our guest today sits right at that intersection where finance meets AI infrastructure and where growth must be balanced with something far less discussed: certainty. What does it take to scale a business that quite literally determines how machines see the world? And perhaps more importantly, how does a finance leader guide that growth when the stakes include not just margins, but trust? Our talk with CFO Tony MacDonald of Sama begins after this.
They say do what you love and the money will follow. My passion for making life beautiful led to a successful design firm, booming online sales, and a TV show. It also led to chaos, endless spreadsheets, and no single source of truth. We couldn't scale, so we chose NetSuite by Oracle. Now I get immediate visibility across the business, from revenue to customers and fulfillment. Clean, simple, beautiful. NetSuite is critical to the success of my business.
Hello, CFO Tony MacDonald is with us. Tony's career has taken him from international audit assignments across 13 countries to co-founding an early internet startup during the dot-com era before stepping into global finance leadership roles at companies like Levi Strauss and Oracle Corp. He later helped scale Sama from a small non-profit initiative into a fast-growing AI services organization. He left that organization only to return to the CFO suite in 2022. Today, that one-time nonprofit initiative plays a critical role in the AI ecosystem, providing human in-the-loop data annotation and model evaluation that helps companies bring machine learning and generative AI into production. Tony, welcome.
Thanks, Jack. Thanks for having me here. I appreciate it.
Yeah, that was a mouthful. I appreciate your patience letting me get that out. But you have had a really interesting and involved path, Tony. And so we look forward to asking you this question. Please look back and share some of those experiences you think really prepared you to become a finance leader. What would those be?
Well, that's a great question, Jack. Unlike maybe a lot of CFOs, I didn't, or maybe perhaps a lot of us have done this. I didn't intend to become a CFO when I started out. In fact, I think my original trajectory was to go into investment banking. But I found myself in the auditing and accounting practice right out of school. I did an undergraduate business degree, and what I think. I followed the path, but what I discovered is it gave me so many opportunities to experience so many elements of the business world, and I was always interested in business. Some of the things that really kick-started my career were a vigor for trying new opportunities that were presented to me. I will say that in each step of my career, those opportunities became more interesting and created a foundation that really made me successful. But I can point to a couple main ones. I think, like a lot of us in the finance CFO world, we were accountants to start with, and I had the good fortune of being able, in my early accounting career, to move into some very high pressure assignments, forensic auditing, and also IPO exercises, bringing companies to IPO, that were those seminal moments in your young career when you're given a lot of pressure, a lot of responsibility, and you find yourself executing to a level that you always had doubts about. And I think, one of the things that really led me to continue on the trajectory was, one, just being confident and being able to have the capabilities of being able to do things that were perhaps beyond what I had originally thought where I was capable of doing. And then I think, over the trajectory, I've done a lot of different things. I would say I had the opportunity to work at the C-suite level at Oracle too, where, it reminded me and gave me, perspective from being at the top of a global organization, where I was taught, it's not just about the numbers, it's about how you communicate and particularly how you listen. And then I think what led me down the path to where I am now with Sama was the fact that as an international auditor, I was embedded in subsidiary companies for months at a time in countries as diverse as Bolivia, Thailand, Kenya, the Netherlands, learning about the world in a big way, in a really genuine, authentic way that made me understand that there's more to life than just what I experience here in the U.S. And North America.
Interesting. One chapter I'd love to just zero in on with you, of course. Today, a lot of people compare the age of AI to that dot-com mania back in the late 1990s. You were part of that. You co-founded an internet startup during the dot-com era.
Yeah.
Tell us something. Reflect a little on maybe the comparison between the two eras with us. What's unique and different? What's similar, perhaps? Don't know.
That's a great question, Jack, and I talk about it quite a bit to those younger generations that missed that dot-com boom. What I can say is the world that we lived in with the internet explosion was, and again, I was a young accountant having had close to 10 years under my belt at that time. We started a company in a place that was very manic in San Francisco at the time, particularly Silicon Valley. We had moved completely off any kind of financial correlation between performance and funding. And I think what's very clear to us now is the AI boom is being funded. There is a disconnect between the funding metrics and the actual financial performance. But the overall benefits that we're seeing and the output, the product of what AI is delivering is absolutely tangible and being incorporated into companies right now. I will say we got a little manic back in 2000 at the peak there. A lot of that infrastructure that we see now relative to fiber was overinvested and ended up being useful. But I think almost everything that's being developed on the AI front right now is transformative in a major way. And the economics may not be ideally where they should be, but I think if there's any kind of correction, it'll be over time in a slow balloon of air being let out.
Okay, interesting. Now I want to just for the listeners have them understand, because you've led this sort of interesting life. You've been in small startups and large enterprise. So, I mean, after the collapse of the dot-com, we find you inside Levi Strauss, where you were there for more than 5 years. And then, of course, you go to Oracle. I would think two very corporate environments. I don't know, two very different companies, two very different industries.
Yeah, I will say, I having been through the ringer with the startup world, and at the stage of life that I was at, the stability was something that I was looking for both personally and professionally. I think you've also realized that there's growth opportunities within large enterprises that are underappreciated and less glamorous. I think it's not as sexy, but a lot of these companies are large and successful for a reason, and they're inhabited with people, and particularly in finance and operations, that have skill levels that are amazing. and they're great learning grounds. And what I can say about the experiences of Levi's is, Levi's was an old institutional business that was undergoing some pretty dramatic shifts relative to the way the world was trading. Local manufacturing to external outsourcing was transforming the industry completely, and it was a time of pretty significant change. And having been there at the fulcrum of some major change in the way the business was being done, stretched your muscles in different ways and to think about investments and transformation. So that was a very good grounding and education into the corporate world. I think Oracle itself was, an amazing experience. If anything has a playbook, it exists within Oracle. That the company, for every process, every combination of business situation, has a really substantial, deep trove of playbooks for how to operate. And I had the good fortune of being able to work in an operating division that had been built on acquisitions, and then eventually moved into a corporate role supporting the newly hired head of sales who had come over from HP and was a former chair and CEO of HP. And I got to lead the financial planning exercise for the entire organization at that time, which was close to 140,000 people. But again, I think that the main point that I learned there is there were some very capable business leaders, extremely passionate and aggressive, smart people working in those organizations that I think gave me a profound leap as far as personal, professional development, and particularly understanding how successful you can be as a finance leader with the skills that I learned there. I can talk a bit about that as we go on.
Specifically, your leadership development. It sounds like at Oracle, when that responsibility you characterized for us fell on that planning for the organization, fell on your shoulders. I would imagine that's your accelerated leadership development plan, and there might have been other stints, but that sounds like where it was on you.
Yeah, and I think like a lot of career development opportunities, they're not always predictable. I think you want to think that your career's linear, but every once in a while you get an opportunity that you need to take that is perhaps uncomfortably stretched in what you think you're capable of doing. But I think what I learned in that situation is it's very much dependent on your ability to work with executives, very, very seasoned executives, which gets you to, and I think a lot of your prior guests have referred this to, a capability of listening, and listening for the subtlety of the communication at that level. I think when you start working in organizations that are that large, that successful, it's a fait accompli. People are extremely intelligent. They're extremely numerical savvy, and they also have an amazing ability to intuit integrity and factual answers. And I think what I learned in my career as being somewhat stubborn, I would say, is I was always honest and straightforward in sharing unpopular opinions with my business partners, and never in a derogatory or in an emotional way. I was always very careful in telling the facts that they wanted to hear. And as I found myself progressing in my career, the successful executives that I worked with appreciated having someone on their side who told it like it was, who was very straight talking on a factual manner. And I think an ability to understand the business that you're supporting, and there were a lot of different business lines that I supported at Oracle, an ability to really understand what the core drivers and the core pieces of the businesses that drove performance made you a successful interpreter of the data for the executive level decision makers. And that led me to a place where I could work at the highest level of that organization, and those skills then became very valuable. And I'm proud of what we accomplished there. And I also learned the next level of executive leadership, professional leadership, and the ability to realize that it's not about you at that point; it's about your teams. and stepping out of your own ego to be able to make your teams more successful.
And if I understand, and maybe I'll try to connect the dots here a little as well, you mentioned there was a sizable acquisition at the time, and as a finance executive, you were somehow involved in that, but that sort of swung open the door to this larger role, which I think many finance executives might relate to or might want to keep acquisitions on their radar. I mean, did I have that right? Or
yeah, at the time Oracle was moving away. They had done some large acquisitions. PeopleSoft had been integrated. They'd done a lot of horizontal acquisitions, and I joined as part of a strategy to do vertical software plays in very specific industries.
Huh.
And so they were acquiring companies and making them global units on their own and not integrating them horizontally. What that did is it was an accelerant to your learning, and both on understanding the businesses that you were overseeing, but also being an expert in the integration process and the acquisition process.
Yeah.
And then also it gave you visibility in all areas of the larger company that I think most line FP&A guys didn't get, or divisional heads. You really had a span of connection to the organization that was truly global and truly across all lines of business. And that created more opportunities. It was a growing area. It had a high level C-level visibility on a strategic basis. So even though we were small relative to the dollars, it accelerated all those dimensions I described, and as a consequence, my career and learning.
the Sama has an earlier chapter that you become part of, and you're the CFO, and it's an early chapter. It's a pioneering chapter. How am I doing? And what was it that first led you there? What originally drew you to this organization and its mission?
I'll circle back to my, it's interesting, but I reflect on this, but my international auditing days where I got exposure to the rest of the world in a very intimate way made me understand how privileged I was and fortunate. And I think what happened at Oracle is I reached a plateau of working with people that were driving business on a grand scale, very successful, very financially motivated. And I found myself being surrounded by people that were top performers, but I noticed my motivation relative to theirs is a little bit different. I wasn't as satisfied with titles or compensation as they were. I didn't feel it as aggressively. And if you're performing at that level, you realize that you can't last unless it's 150% all the time. And so it led to a period of career introspection. And what I realized is I missed the operating days of working with a smaller team, my startup days. I missed building from the ground up. I missed having a bigger span of control. And particularly, I felt there was something I could do that was more meaningful from a social impact. And I started looking at first at joining some startups in the Bay Area. But I found myself coincidentally drawn to a new startup that was at the time a nonprofit, and they had a mission of delivering jobs to East Africa as a nonprofit, and it was called Impact Sourcing. And it just it was one of those things where in my career I felt that there was an opportunity here, given my experience with Oracle, to accelerate what was happening in this business. And I felt that there was an opportunity to both impact and successful growing of a startup business, and that led me to Sama. Interesting.
Could you give us a sense of that first chapter you were there? How small a company did you join? And your tenure, that first chapter was like 4 years and 4.5 years roughly. What would you tell us?
Well, I went from working in glass-walled meeting rooms on the 11th floor at the Oracle Tower to a rickety old elevator that felt like I was going to die in a very low rent building in the Mission District of San Francisco. And my initial and I think a lot of people that would listen to this, but I came from an environment that was extremely different as far as experience, capabilities, and knowledge. and to a group of, there were 60 of us in total there, but everybody was, it felt like, under 30 and had never had a professional experience beyond wanting to do good in the world. And they were unbelievably bright, unbelievably hungry, but just lacked experience. And my initial reaction was that we need, ultimately we're going to need to fire everybody. And of course, that's just not physically possible. But the change was quite profound for me. And having had earlier startup experience, I knew roughly what I was getting into. But after 15 years of working at a corporate level, I realized this was quite a transformation. But within that organization, the founder at the time had a magnetism and an ability to articulate the vision of what she was trying to do that was, like a lot of founders that are successful, a core component of creating enthusiasm for a mission and a business idea. And she had leadership skills that were tremendous. And in combination with the capabilities of the team, they were all hungry to learn. There were the grains of a successful opportunity in a business there to make it scale properly, and it needed a little bit of shepherding. And so, a lot of the changes that took place initially had to do with me bringing a perspective of how things would be working in a regular or a larger organization, and how do we put ourselves on the path to being able to do that. Which created, in some cases a lot of friction, but I had the credibility of having worked at some senior levels and some large organizations that gave the founder some trust in my opinion and my perspective. It was a good balance.
Well, it's interesting. Again, you had, you leave, you have another CFO appointment, and then you do some CFO consulting gigs. And then of course you return in 2022, as the CFO. That's the company we want to learn about now. Sama today, Sama during your latest tenure. Tell us about Sama. What is it up to? What sets it apart today?
Well, as you mentioned, we're a data annotation services company. We're a tech-enabled services company. We have a platform, and we have data annotators that are specifically located in East Africa that started with our original mission. And we have over 3,000 employees in Uganda and Kenya, and we have a data platform and global enterprise top, Fortune 100 customers that we've been working with in some cases for over 14 years. What has changed in the time and we felt the seeds of it my first tenure, was the fact that the annotation space, to be able to train and articulate data, describe data for ingestion into artificial intelligence algorithms, has exploded, as we all know, and we were at the very start of that trend. And what distinguishes Sama right now is that I mentioned we're in East Africa and we started as a nonprofit. That's not ultimately what our customers value. What our customers value is the data certainty that we provide in the training data, the predictability of what we do. And to give you a very specific example, we work with automobile companies and being able to make sure that their self-driving car technology is accurate on the roads. And that requires, as you can imagine, volumes and volumes of annotated images that have to be done at a very high quality level. And so what distinguishes us is we're very cost efficient, not the cheapest, because we do ensure that we treat our employees fairly, but the accuracy and the data analytics that we provide around those data solutions and the data output that we provide.
That's a great example.
We've got a good reputation on that area.
Sama combines, if I understand, commercial AI services with a mission to expand digital economic opportunities. And as a CFO, these sort of social economic models, how do you balance financial performance with that social impact model?
Well, Jack, that's exactly why I was excited about joining Sama, because I knew that we could develop a system to do this. And I'm not going to be as rose-colored glasses about how easy it is to do this, but and not overplay the social impact importance in the sense that at the end of the day, we are now a for-profit company with investors, and like other businesses, our goal is to be able to grow and create financial return for our investors and create value. Having said that, we've developed a way of thinking about, and this was part of our strategic thinking originally when we converted to a for-profit, was we are legally a B corporation, which requires us at a board level to include both investor and other stakeholder considerations when we make large decisions. But ultimately, what I've found is we're putting the profit and the financial business as primary, but our resources are being put back into the organization in a way that considers all stakeholders, and particularly our impact employee base. And the way that we think about this, and the way that I've thought about this for a long time, is it's good business, and we can show on our metrics relative to attrition, relative to turnover, relative to consistency of careers and progressions and investing in that it's created upside for our model and stability that I think a lot of other organizations that compete purely on cost are challenged with. And so it's a tough thing to articulate on a day-to-day basis because we constantly have challenges that push us from either side. But at the end of the day, we're always balancing very carefully to make sure that our organization is growing and that we are true to the impact mission and being able to scale and employ and provide resources to our teams and training to fulfill our impact mission. But it's a triple bottom line exercise, and I will say it is the hardest thing to do as a CFO to be able to balance those.
Well, what would be the metrics that you're looking at then? I mean, that's something we always enjoy talking about. And for other finance leaders not familiar with this business,
well, obviously we look at the basic financial metrics like revenue growth and margin. But we've stood up a global operations team that drills into very, very detailed metrics relative to quality outputs and quality metrics on investments, relative to quality time, overseeing quality reviews. Because again, quality is at the top of the differentiation, and we have very, very strong metrics there because we break it down. And what that means is like understanding the data output, but also what is the input that we're doing to check that quality? What is the cost ratio of cost to quality? And then we have, hundreds of other metrics relative to time, performance on tasks, performance on an hourly basis, very unitized metrics to try to optimize as much as possible, the performance of our teams, including, incentive ratios, hourly pay, et cetera. So, they're very much service driven, metrics, but I will say, from an internal operations point of view, we spend a lot of energy talking about the quality relationship to cost on our side. And then, for our customers, we really spend a lot of energy and devote a lot of development time to creating analytics for their digestion, not just on the data that we've provided them, but the overall output, the qualitative and the quantitative dimensions of the data that they're getting. And that analytics envelope relative to what we provide as a service helps the data engineers tremendously, and it helps manage their predictability of their project management, which as a lot of people know, managing AI projects is fraught with uncertainty, and the more certainty we can bring to that, the better the performance and the better the value that we provide to the customer.
Just given your past experience with revenue ops, can you share with us your mindset as far as the role of the CFO related to revenue ops? Is this how do you view yourself?
Yeah, that's a very good question. So a lot of this is informed by my experience at Oracle, which is a heavy sales-driven organization. And the analogy that I like to use, and I mention this every time we bring a new sales executive on, is, my role as CFO, everybody misperceives it as being someone that says no to anything. But my perspective on sales is that I would like to be considered as one of the people on the stagecoach that helps hold the reins. And the salespeople are going to be the horses that I want galloping always full speed ahead until we ask them to turn the reins a little bit to the left, or use the reins to turn to the right, or slow down a bit. And so my philosophy on revenue ops is I want to reward exceptional performance unconditionally relative to quality revenue. And so I'm not afraid to invest in celebrating and paying for overperformance on the sales side. But we're also going to be extremely rigorous on the sales metrics to make sure that on the way to that exceptional, output, and closing, that the performance is managed successfully, and that we're always optimizing our sales engine. Typically CFOs are the ones that are brought into the sales process to look at exceptions relative to sales compensation or to compensation plans. I tend to be more aggressive in that balance in saying, let's put some governors on the process, but let's make sure that they can go and sales can be successful. I'm always very, very happy when a salesperson closes a giant deal. And I want the organization to know that is to be rewarded. And then everything else fundamentally needs to be sound relative to the tracking of all the metrics from original lead generation and marketing spend all the way through the whole funnel. And we're constantly trying to improve the calibration of those metrics, and the new tools that we have in AI allow us to improve that dramatically, that visibility and correlation.
Do you think that past experience would we be surprised to see that your finance team spends its time a little differently than, I don't know, more traditional finance teams? And by that, I mean, maybe they're more involved in projects. Maybe you think about how to use their time a little differently, or.
Yeah, I mean, that's a good question. And I think, that may be the case, but I think it had more to do with the fact that our finance team was quite capable and was relied on more than it should have been originally, not necessarily because I had the background or the expertise in sales finance. But we do spend a fair amount of time. In fact, I'm helping our marketing director develop a new dashboard as we speak. So there's a little bit more leaning in going on, but it's not necessarily always because of my experience. It's a combination of capabilities and experience.
So, as CFO, what are the most important financial priorities that you see as guiding Sama into this next phase of growth?
Well, I think, our organization was affected by the tariff news last year. It was one of those areas that really threw us a curveball. And I think the uncertainty in the world is greater than I think I could have predicted 5 years ago, even after COVID. And so, our priority, which is probably the same as all my peers in all industries, is efficiency. Not just our financial team's efficiency, but the overall organizational efficiency. And particularly, how can we leverage the new capabilities that we're seeing with our tools, the AI enablement, to be able to get productivity up across the board, and do so at less cost, more output for less cost. The environment from a funding point of view has changed, and we definitely have a lot of competition in our business, and we don't see that diminishing at all.
We wonder, just given the role Sama plays here in this critical role in preparing and validating data, how do you see the human in the loop model maybe evolving as AI systems become more sophisticated? I mean, is this human oversight, is it likely to remain as essential or part of it?
Yeah, I mean, it's interesting because when I joined Sama, we always thought we'd be automated away at some point. I think over time in this business and experiencing AI, I think we're finding a remarkable trajectory of accuracy improvement, but there are elements where there's catastrophic errors that can still be discovered within your AI application. And to make those applications ultimately 99.999 successful requires a level of human oversight and expertise. And where we're evolving on the annotation side is to be able to move from initial data creation to data maintenance and data improvement. The world is constantly evolving. It's always changing. The limits of the AI and the large language models is it's always based on history. And so it's the ability to move, we're not at Gen AI yet, but if we get to a place where there's just overall generative AI capabilities, we might be able to do without humans, but until the point that the history is going to be the source of all the AI, you're going to need that oversight and that data curation and management to make sure that the exceptions are dealt with properly.
Wow. Since Sama works directly with companies deploying AI models, you have this front row seat to adoption trends. I mean, what patterns are you seeing in how enterprises are operationalizing AI?
That's a great question, and I think everybody wants to know, because I think it's in all the headlines, and I think we've read all the reports. I mean, we spend a lot of time internally understanding the AI space. What I can say is it's been uneven in the sense that the success expectations perhaps been a little bit ahead of what the reality for delivery is. And my perspective, having seen large enterprises direct from senior levels, investment in AI projects, is the devil's in the detail. And I think there's organizational inertia that is always challenging to navigate when the technology changes, in addition to expectation management about what and how these projects can be delivered. And I think we're still at the phase where we're learning how to deal with the organizational inertia. You can't tell someone to replace themselves out of a job by creating an AI solution. There's got to be a path that needs to be built for that inertia to be overcome and for people to collaborate successfully in it. And then I also think for CFOs like me and my peers, we need to have more realistic expectations on what the ROI will ultimately deliver and when, because there tends to be a lot of over-promising or over higher level expectations on what can realistically be delivered in what time. I think we're going through any new technological wave where we're still digesting those two trends, and I think it'll play out, and we'll find ourselves in a better place. But what we have seen with our customers and also just in our industry awareness is there's a lot of unevenness in the success of projects. Some are hitting it out of the park and some are failing miserably. And a lot of it has to do with not addressing those two main criteria and those main points of organizational inertia and how people are doing their jobs and how do they deal with the AI change, and also the expectations of being able to understand how successful it's going to be and by when.
Well, we're almost to our finance strategic moment question, but I'll end with one more AI-related question here in this segment. And we're going to ask you to be the futurist here. Looking ahead 3 to 5 years, how then would you expect this intersection of AI and human expertise to be reshaped?
Yeah, I mean, I didn't expect myself to be in a CFO podcast to answer the ultimate question.
Sorry.
But without getting too philosophical, I remember reading Ray Kurzweil's book on the singularity 20 years ago, and how there's a point beyond which we can't see what's going to happen because the change is so dramatic. And accepting for that, which could be possible in the next 5 years, I see always, and this is partly based on the inertia of my history in the sense that we were going to be automated out all the time, is we are not as the LLM model and solution. Again, I'm getting a little wonky here. It's an amazing solution, but it, again, is a statistically programmed way of coming to the next word that makes sense. It's not yet where we need to be. And again, borrowing back from what I said relative to, we're going to be influenced by history in all the AI solutioning that we get. We're going to have to, and there's a huge amount of capabilities that does allow automation in. But I really do think that at the end of the day, the people will be needed to be able to make the leap into what the origination or the next phase, or what the reality of the world will require from an AI engine. And it may be obviously in a manner and a less touch points and less frequent, but there's always going to need to be some guidance on that until we get to a place where there's other technologies to help with the LLM solutions.
Tony, thank you so much. We threw a few extra questions your way there, but I really appreciate the AI discussion and knew that you'd have some interesting insights for us. So thank you. We are up to what we like to refer to as our finance strategic moment question. And again, this may have happened anytime during your career. It might have happened back in the .com era. Who knows?
Yeah.
What comes to mind when we ask for a finance strategic moment?
Well, yeah, I think the toughest parts in finance are rarely when you're delivering good news. And so I've never been in a board meeting where I felt uncomfortable delivering, above expected revenue results. It's always when we have to point the flashlight on something that's uncomfortable. And invariably, it gets me to some specific examples where we've had to discontinue some things that everybody was very optimistic about. And I look back at the starting times with Sama. When I joined, I had a very enthusiastic entrepreneur that was amazing at generating new business concepts and new ideas. What I realized is that we were spreading ourselves so thin that none of those ideas were going to be successful. And the challenge that you have as a finance leader is not to be swept up in the emotion and the hype of what a successful CEO or a sales organization or visionary can create, but be able to dissect into areas and really gestate the data to provide a point of view on what could help be successful. And so for me, the real strategic challenges and what could be a seminal point for most finance leaders' careers is being able to be successful in transitioning or focusing, shrinking to grow, or focusing and discontinuing some initiatives that may have all the energy behind them. And the way that I found myself to be successful was not to be confrontational, but to let the data do the talking and let the facts play out over time. It was more of a slow burn where every time that we realized we were spread too thin and something was working, I would point out we could have invested that time into this and the ROI would have been greater. And so it's always a challenge with a CEO, particularly a founder of a startup. And I would expect in all my experience in working with strong leaders that are running businesses, the growth is always the most important thing, and the new thing is always shiny and exciting. But the toughest challenge is being able to navigate that dimension where you don't want to be against the vision and the excitement, but you do have to point out what could create opportunities for better growth and more solid success. And I think that it's tough. It depends on personalities, but it takes a lot of listening, a lot of patience, and a lot of data.
Great. Excellent insight for us. Thank you for that. We're going to move to our mentoring round. We asked you to look back here again. We want to know about your first 60 days in a CFO role. Again, you had these large enterprise tours of duty. You had the .com experience, but the first time you stepped into a CFO role, really, and you felt, okay, these are the responsibilities. This is what it's about. What if you could go back in time and tell yourself what is it that you didn't know? You had observed, finance leaders for years. What is it?
Yeah, that's a great question. I think for me, what I'd wished I'd known is that you're very much you are trusted to be a neutral party in an organization, and that takes a lot of work to maintain your neutrality. But you need to build the resilience and the capabilities and the teamwork to be able to always be neutral in the way that you approach your work. And like I mentioned in the earlier, discussion about helping the CEO find what's important and maybe discontinue things, the neutrality is trusted with good executives. And I wish I'd been told earlier on that investing in that neutrality, either by talking to people that are older CFOs and focusing on that topics, what are the tricks that they've learned? What are the relationships they've developed with boards, with more senior level executives to prove that neutrality and to prove the objectivity, that have made them more successful and more trusted. I think it took me a while to find that place, that right balance.
We always like to ask our guests to reflect a little on the personal side. Tony, what is something many of your colleagues might not know about you? Kind of hard to believe that, given that you've been there and you've seen this company grow up to a certain extent. Well,
we've had this internal exercise for a while, so I'm not sure there is something. We have icebreakers all the time, but one thing that may be relevant is when I was a younger accounting student, I took some comedy improv classes, and what I got into that, and what I realized, it taught me many things about being a leader and communicating successfully, and the two of which I thought were amazingly relevant was to be comfortable with silence when you're talking to a team, and comfortable being quiet when listening, and then also always following a no with a but. Or it's got to be a yes and in the improv circles. But if you're a CFO, if you're going to say no, let's talk about what the but and is. But you could do this, and you could do this. Know why, and then what can you do? And so it felt always. I was always surprised with my accounting colleagues that they discovered that I was doing this and auditioning for comedy troupes. But what I learned in that path of my life was that there are some skills that are really crucial to being a successful leader, particularly in finance, that I learned from that endeavor that I took when I was younger.
That's great. Thank you for that. What about a book or a resource for us? It doesn't have to be a business book. Doesn't have to be a book. Might be something streaming. Don't know. Anything that's influenced your thinking, something maybe you escape with?
Well, we're overburdened with too much information these days, and I do find myself having trouble reading books just based on the short attention span that I've developed. But in thinking about business, I've always been a hero. I've always worshipped and hero worshipped Warren Buffett. And the one thing that I remember reading about him in The Essential Buffett was, if a business deal can't be done on the back of a napkin, don't do it. And his message that I found very profound is, those of us in finance with our facility with numbers have a way of overcomplicating everything. But at the end of the day, if the facts don't look obvious to you or make the decision clear, the detail isn't necessarily always going to help. And I think as you get to be a leader, you start understanding that intuition for knowing where the facts are on the high level and what the main needle movers are and the certainty of certain data points. That ends up being so important. And I feel like I've learned so much from reading and following him on understanding business value, understanding the importance of integrity, and filtering out and ferreting out disingenuous communications. Have been inspirational to me.
Great recall for us. Thank you for that. We're up to our final question. We're going to ask you to look forward for the coming 12 months. We want to know what your priorities are as a CFO. What would those be?
Well, I'm at the stage of my career where I get the greatest enjoyment about enabling my team and bringing them to the next level. I've always been very much into helping my team grow and accelerate their development, professional and personal. I'm getting more satisfaction out of that path. But I will continue to invest in making sure my team is extremely capable. And so that never goes away. And the way I articulate it to them is that I want to see them grow, professionally and personally at a level that they're just barely comfortable with, almost uncomfortable with. Because if you're not growing uncomfortably, you're not growing fast enough. And then, from a business point of view, back to the fact that we're in a period of, let's call it, less abundance and more uncertainty. So all our financial priorities are really built on efficiencies, both pushing the organization to being more efficient, and then within our teams themselves, like looking at how we can do more with less spend. And again, that brings us to leveraging all the tools that we have available to us, and doing more with less. But those are the top themes.
Tony MacDonald, thank you for joining us on CFO Thought Leader.
Thanks so much, Jack. It was a pleasure.